What's going on, family? It's your boy Wall Street. Welcome to another Sunday Outlook call. This is a call that we do just to get you guys prepared, get you guys ready to succeed another week in the markets, right? Obviously, if you stay ready, you don't have to get ready. We want everybody adequately prepared for the week in front of them, so that way they can come in and do what it is that they need to do. We got 30 on the call so far. What I want y'all to do is go into all your chats, ask them where they at, right? Because we got my personal group on here. We also got the free group on here, right? The free Telegram where we do one call a week. But I don't care if you in any other groups, whatever the case may be, drop the link in there. Let's make sure everybody gets some value today and are prepared for the week to get going, all right? So with that being said, go into your chats, ask them where they at, and we're going to go ahead and get to that bag, right? So if you guys don't know, if you're tapping in with me for the first time, my name is Ray Baylor. The people call me Wallstreet Ray. Been trading now full time for over 5 years. Been able to do this thing at a high level, help a lot of people. And this is the reason why we do this, to be able to come on and help everybody achieve levels of greatness that is within themselves, right? Now, we're going to obviously tap into the technical analysis side of things. But with that said, I like to start off and go for about 5 minutes of mindset. Reason being is because regardless of your technical ability, the mindset is key in order to help you guys actually apply the information properly. 9 times out of 10, you probably, not everybody, but a lot of y'all that have been trading for a few years already, you already know what to do from a technical perspective, but it's the mental element that you're missing, right? And here at Trade Genius Academy, I do my best to go ahead and make sure I harp on both elements of trading, right? Both technical and psychological. So on the psychological side of things, what I want you guys to, the key word of the week is focus, right? Focus. And the thing about focus is you might think you're focused, but you could always take it up a notch. You could always take it up a notch. And that's what I love the most about trading in general, is that you could always outdo yourself because you're the only person that you're in competition with. Now, focus not just on your strategy, but focus on your work, right? Focus on what it is that you can do. Don't pay too much attention to what everybody else is doing. I want you to focus on what's right in front of you. And I also want you to focus in on one strategy, right? One thing that caught my attention this past week, I had a mentee of mine reach out and say, hey, Ray, I learned your strategy. For some reason, I started learning other people's strategy. And then I came back to the Hezi crossover, and this has been the most accurate strategy I've learned, right? Now, don't get me wrong. I'm honored to hear that he feels like mine is the best. But at the same time, one of the problems that we run into a lot as traders is doing too much, right? We dive deep into this rabbit hole of education where we're constantly studying and we're on information overload. You learn it from me, you learn it from another mentor, you learn it from 10 dudes on YouTube, and you take it in so much information, you can't just make one thing successful and make one thing work for you. So if you're on this call with me today, I want you guys to do your best to just focus in on what it is that we do. Focus, if you're a part of Trade Genius Academy, focus in on the Hezi crossover, focus in on aces. Focus in on the way that we view liquidity, because I'm telling you right now, trading is a paradox. Trading has so many different ways you can do it and be right. But the thing is, it's not the strategy that makes you profitable. It's the consistent application of the strategy. So while so many people are trying to find a way to not lose, you just need to find a way to be profitable, right? And there's a big difference between being profitable and never losing. The main difference is one is possible and the other is impossible, right? So if you're continuously studying, trying to avoid losses, you're going to forever be going into this deep circle, into this black hole of studying, and then you're going to burn yourself out because years are going to go by because you do all the external work, but you don't focus too much on the internal work, right? So let's all this week, let's make the commitment and type focus in the chat if you're going to promise me that you guys are going to focus on one thing for the week. Because I'm telling you guys right now, win or lose, the outcome can be income, right? You win some, you lose some, as long as the outcome is income. So stop trying to avoid losses. It's impossible. All right. Stop trying to avoid losses. It's the cost of doing business. We're all entrepreneurs on this call. We're all traders. We're all investors, right? So at the end of the day, if you're going to be an investor, if you're going to be a business person, if you're going to treat trading like a business, you have to understand that your business comes with business expenses. The business expenses are those losses. At the same time, as long as your profit outweighs your losses and your expenses, then by default, you have a successful business. Then later on down the line, you look at ways you can cut expenses more. And that's how I focus in on my strategy even more. That's how I refine the minor fine details, right? But overall, we're just looking to have a profitable business. And what I don't want you guys to do is get too distracted with too many other different things, right? Focus on one thing and let that one thing take you to success. Last but not least, I want you guys to make sure your expectations are in the right place this week. All right. Too many times we take a couple losses. Too many times we get down on ourselves. And again, trade losses are a part of trading. I'm telling you from experience, there's been times where I've started out the week 0-2, 0-3. And then on Thursday night, I come back with a 1-10, 1-15 banger of a trade, right? But the people that don't know what I mean, 1-10, 1-15, that means if I'm risking $100, I can make 1,000 or I can make 1,500 because my profit potential is 10 times or 15 times what it is that I'm risking. So I want you guys to continuously show up because as a trader, we don't get paid off of the hours we put in. We get paid off of the opportunities we take advantage of. So if you work a 9 to 5 or you work a day job, you might be used to getting paid by the time that you show up, right? But as traders, you get paid by the opportunity. So you might show up for 3-4 days and work without pay, right? I wake up at 6 a.m. every day. There's times where I wake up at 6 a.m. when I don't even have to, and I don't even end up making any money, right? But I understand that if I stop showing up, the day that the market has that huge move that can change my life, that could pay bills for the next few months, I'm going to miss that move if I stop showing up, because the thing about opportunity is you have to properly prepare for it. So that way, when it does arrive, you're ready to take advantage of it. All right. So just make sure you're continuously paying the dues. I tell people all the time, look, if you showed up for a New York session, 6 a.m., 7 a.m., 5 a.m., wherever you located, and you didn't get paid for the day, it's cool. Don't be upset, because you're just preparing yourself to be ready for that morning you do wake up and you catch that 200 pip banger. All right. So that's my quick nuggets for today. Focus and preparation for the opportunities ahead of you this week. Now we're going to start this thing off with Euro USD. All right. Now with Euro USD, what it is that we're going to do is start on the higher time frame. This was a setup that we did take in the private community. What it is that I want you guys to understand is that on the daily time frame, this market is clearly making higher highs and higher lows. And it's pretty easy to understand. It's pretty easy to see what's happening. We're making higher highs and higher lows right now, all right? And with the market actually coming back into this low area, we see how close it is to the previous low. So now we're in a bouncer break area right now. We're in like a do or die type of area where if the market is going to bounce, it needs to bounce like now or later, or now or never, essentially, because at the end of the day, if we're going to look at this as the bottom of our trading range, and this is the top of our trading range up here, the market has essentially retraced most of that range, right? So in order for this market to continue to be bullish, we should be expecting a reaction out of this low, or at the worst case scenario, we just come take this low barely, but then the market should immediately come back above that low in order to respect it and continue to push bullish. So the thing is with this, and the other reason why I am bullish is because I am bearish on the DXY. All right, for the people that don't have a whole lot of trading experience, I want you guys to realize the importance of the DXY. This is what we call the dollar index. The reason why this is important is because this is one of the base currencies. This is one of the currencies of many of the currencies that we trade. So when you look at USD CAD, or you look at GBP USD or Euro USD, all of these currencies that have USD tied to it in one way or another, we can look at the DXY and get a good analysis as to what it's actually going to end up doing. So as I look at the DXY, what I do see is I see the market created this high here, and then we actually came and cleared that high out. For the people that don't know what that means to me, obviously, if you're in the mentorship, you should know, especially if you have the course. But what it is that we look for is strong highs, okay, to be formed. And what I mean by strong high is the market creates a high and then it takes a high, all right? And that's what makes it strong. If we have the market make a high, then the second high is equal to or a little bit lower. This would be the resemblance of a weak high. And the reason being is because there's still liquidity above it. Now, I'm not going to go into a deep lesson on liquidity because we could be on this call for hours. But if you don't understand what this means, liquidity is essentially the fuel that the market needs in order to make moves. Now, when I'm looking for the overall direction that I want the market to go, I'm looking for very specific cues. I'm looking to see which side of the market is taking liquidity, and I'm looking to see which side of the market is creating liquidity, right? So essentially, if I'm looking for a bearish opportunity, I want to see highs that are taking highs and then pushing lower. And then I want to see lows that are not taking lows and then continue to push a little higher. And then same thing, vice versa. And then we continue to push down. So as you can see here, we have highs that took highs. Then we have weak lows formed. Then we have a strong high because that's a high that took a high. Then we have a new low form. Now, look at this picture. Picture this image in your head right now. And then let's come on over to the left. All right. Yo, keep sending this link out. We got like 40 on the call. We got just under 40 on the call. Keep sending this link out, guys. All right. So what that essentially means is once we make this high right here, and then we clear this high out, this would be our example of a strong high, right? And then as we come down to the low, you see we make a low here, and then we make an equal low right here, okay? So these set of equal lows tell us that those are weak lows. So if we have a strong high and a weak low, the strong high is protected while the weak lows now become targets. So now that it's a target, we know what direction that the market wants to go. And essentially, this is why we eventually came down and made this new low right here. So now, this is now the high of my range up here, okay? Right here at this high. And now this is the low of my range, okay? And now we look for the exact same thing, okay? Now the market can retrace as far as it wants to, but as long as we respect the top of our range over here, we are still bearish overall. So now we come over here, we could actually zoom in and we see the exact same pattern form, right? We see a high and then we take that high, right? So that's the exact same pattern that we talked about over here just a moment ago. We make a high, then we take that high, and then we're anticipating the market to push lower. So right now, we're like right here, if you see where we are right here. So right now, I'm trading with anticipation, hoping that we're actually going to continue to push bearish based off of what I see on this higher time frame. I see, there is a lot of reason to suspect that we're going to go bearish. And that's the thing about trading, guys. You have to have some sort of anticipation to what you're doing, because if you just wait for all of the signs to show up, it's like, yeah, I could tell you this is bearish once it starts to, drop down here. But, look at how much opportunity you've missed by the time you wait for all of those confirmations, right? At some point, you don't want to trade prematurely, but if you have enough indications, just take the trade. Because what a lot of people do is they want to wait for so much confirmation that eventually they're just going to end up missing the trade because, you're looking for so much confirmation. I believe that there's a big difference between being patient and being hesitant. And I would write that down if I was you. A lot of people have a problem just pushing the buy or sell button. And I want you guys to understand that there is a difference between being patient and being hesitant. Being patient is me waiting for this pattern to form, but me being hesitant is telling myself that I still don't have enough, right? I still don't have enough to take the trade. Being hesitant is me saying I still don't have enough for me to trust that this market is going to drop. And hesitation will get you killed in these markets. You need to just push the button if you see what it is that you need to see, right? Win or lose, it's not your job to try to determine that. Us as traders, we need to trade what it is that we see if our confirmations are met, because again, being profitable is a combination of wins and losses. So if you don't take the trade, that means that you're trying to avoid something that's inevitable. And then by default, you're going to avoid the possibility of being profitable. Because type a 3 in the chat if you could relate to this. Every time you thought the market was going to do something and you didn't act on it, it ended up moving the way you wanted it to, right? But then when you did when you did act on the market, let's say you took a loss, right? But at the end of the day, if you just would have treated every trade exactly the same, you probably be profitable, right? If you just treated every trade exactly the same instead of picking and choosing what you want to take and what you don't want to take. I'm not saying take every trade, but what I am saying is if it meets your requirements for entry, take it. Okay, that's the best thing you could do. There's such thing as a good loss, and there's also such thing as a bad win. Because if you win and you don't know why you won, that's a bad win because you're building up bad habits. But if you lost and you did everything right, you could still be happy with yourself knowing that, look, I took a loss, but at the end of the day, I know that's a part of trading and I still followed my rules, all right? So understanding what it is we see here, we swept highs, made a new low. We come up into this high again. We created a high here, and then we took it right here. So that tells me again that this market has a good chance of returning bearish this week. You see, last week we actually finished bullish. If I come down to the 4-hour chart, last week we got this big bullish push right here. And I was actually happy we got this. This is exactly what I wanted to see. If you guys were like on a call, any of the calls with me last week, you know this is exactly what I wanted to see. And I want to see this because it's a footprint to what I see over here. So when you see this big bullish candlestick right here, it's important to understand that now we're trading with the banks. Everybody says trade like the banks, trade with the banks. Like that's a term that everybody throws around, but this is what that means, right? Us as retail traders, if you have a MetaTrader 4 account or a MetaTrader 5 account, and you have anything less than $50 billion in your account, that means you don't have the ability to make the market do this. There's very few people in the world, right? There's major hedge funds, institutions, things of that nature, banks and stuff like that. Those are the people that can make the market make a move like this. So you want to trade in the areas that have those big impulsive moves. So when you come over here to the right and you see another big impulsive move like this, now you can actually, have that alert go off in your brain that says, okay, look, regular people didn't make this big bullish candlestick. This has to be somebody with more power than the average typical everyday trader. So not only do we have this footprint right here that matches the footprint over here, and when I say match, I don't mean necessarily match in size. I just mean match and, it looks somewhat familiar, right? It doesn't have to be the exact same size. So now we have that. And now we also have this high right here, okay, that was cleared out as well. So again, as we explained a moment ago, a strong high is when the market creates a high and then it takes it out. So that's what we have right here. We created a high and then we took it out right here. So that should tell you right there, okay, this market is probably going to start pushing back down. So this is what I anticipate us happening, over the course of this week on the DXY. I'm expecting bearishness this week. All right. I want us to actually drop all the way down to 101.3. Okay. If we can get down to 101.3, I'll be very happy. I'll be very satisfied with that. if we want to be real specific, like we could say 3.5. All right. But I like to just use big, bold, round numbers just so you guys can easily remember them. But if I'll get specific, I'll say 101.35 is what I'm expecting on the DXY this week. Now, again, now we can use this to our advantage when it comes to other pairs, because if the DXY is bearish, that means that any pair that ends in DXY or ends in USD should be bullish, right? Any pair that starts with USD should be bearish. So let's take a quick look at USD CAD. All right, let's take a quick look at USD CAD. So right here, what we notice is a similar concept that we just spoke about, right? We did just speak about how when we make a high and then we take the high out, we can anticipate this bearishness, which we already started to get. But I am anticipating that this will continue to drop over the course of the next week. All right. Just with DXY weakness continuously coming into the market. Now, where might we drop? Good, solid question. Primarily I would like for this market to retrace back up here. That's the smartest place to get in. And that's one thing that I'm gonna stick to. I'm gonna stick to the market, coming back up here. However, you can come down to lower time frames and see if you see anything that meets your requirements. Me personally, I could see us making something happen here, but I feel like I am more comfortable taking the trade a little bit higher, right? Now the DXY doesn't have to drop at the same time as USD CAD. The DXY could just start dropping first, and then as we look over here, we do have some CAD news. This is in the morning. I want to say, what time is this? That's 7:30 in the morning. Yeah, so we do have red folder news tomorrow morning. The way that I look at news, I don't try to dissect it. I don't try to figure out what the outcome is going to be. One thing I do know is that news accelerates technicals. All right. News accelerates technical analysis. So I figure out what it is that I want to see on the technical side of things. And then I anticipate that news will just speed up that process, because hedge funds, institutions, big players, they use news as an excuse to add volatility into the markets. All right. So what that means here is, I do see, some relative weak highs here, right? And I see a weak high up here, but I do see this area of imbalance that could be filled out. For the people that are unfamiliar with imbalance, it's pretty much just when the market is just pushing in one direction. You see here, we have nothing but sales in this candle. So the market will typically push up and register some buys in this area. So that way price is rebalanced, because if you look at the difference between this candle and all of the other candlesticks, you see how all the candlesticks pretty much have wicks on both sides of them. And that means that, there's a good amount of buyers and sellers within all of this price. But then you run into these areas that have a large gap where it's just moving in one direction. You have one right here. You also have one right here, which we could also take a look at. But I always typically go for the higher one. So the fact that there's nothing but sellers, the market will probably have to put a buy wick in this area. And this is how, a lot of ways that I'm able to get wick entries on certain pairs, right? In certain scenarios. So that's one thing that I'll be looking at. I don't trade USD CAD that often, but I wouldn't be surprised to see us get some bearishness on it. All right. So now let's go ahead and take a look at some of the pairs that we like a little bit more. GU is one of my favorites personally. What it is that I see here, I am anticipating bullishness. We did take some buys. We caught some sales here. Then we took some buys here when we swept those lows. And this one was kind of crazy. If you was in a live community, you caught it. I know the group has grown pretty drastically over the past few days, so all of you guys may not have caught this one, but we did get into some buys down here. And I did take partials right here. And this is the other good thing about just the way that I personally trade, I'm always partialing out when I reach highs, right? Or lows if I'm trading in the opposite direction. Because we can always anticipate higher pricing, right? We can anticipate the market can go up as far as it wants. But when you clear out highs, you have to anticipate the possibility of the market reversing in the opposite direction. So that's why we have a trading plan where you get in, all right, you hold, you clear highs. Once you clear these highs, you partial out no matter what. All right, it closed 50%, let the rest run. And the reason why that's powerful is because all of my trades are at least 1 to 5 risk to reward. So again, even though I wanted the market to go significantly further, we're getting at least 1 to 5 every single time we take a trade. So that's going to be a huge positive. To anybody that doesn't know what I mean by that, the higher your risk to reward, the more profit potential you have, and the less you actually have to be right every single day. A lot of people that trade 1 to 2, 1 to 3, you have to be right a lot more than somebody that's trading bare minimum 1 to 5s, right? Me trading 1 to 5s, I can be right 20% of the time and I could still make money. All right. And that's a beautiful thing. Okay. If you guys aren't following me on Instagram yet, make sure you give your boy a follow right here. Be much appreciated. Any other page is not me. I do have a couple of business pages, but they are all in the bio of this page. So you'll know who is me and who's not me. I just want to point that out because I'll probably be uploading this to YouTube and there's a lot of scammers out there. So I just want to point that out. All right. But the reason why I do feel comfortable about this area right now is because even coming over here, looking to the left, we have an area, right? We have an area that took out a low, which is a positive, right? Because that's how a strong low forms. We create a low, then we take a low, right? After taking that low, we pop up, we make a high, make a low, then we make a higher low. So here we create a weak low, okay? Now, this goes into the hezzy, right? I'm not gonna say too much, just out of respect for my core students and my private community students. I can't just give up every terminology that we have. But what is important to understand is that we like to take trades in between areas that have strong lows and weak lows. If you could really understand what it is that I'm saying when I say that, that can really help you out a lot. We take buys in between areas of strong lows and weak lows, okay? So really think about what that means. This is your strong low. This is your weak low. We get in between that area, okay? It's a little area in between that you're going to be looking to buy from in the future, okay? So now understanding that, I'll give you guys that, but I'm not going to give out all of the terminology that we use. With this being said, we create a weak low here. So when we come and take out that weak low, and then we understand that this is a strong low based off of this pattern here, now I can actually anticipate bullishness out of that low, okay? So when the market comes way back to this area, we see why it is that we get this reaction, okay? We see why it is that we get this reaction right here. I personally do believe that we'll go bullish from here. I think that this has a good chance to be the low of the week, all right? Most people say they form on Tuesday or Wednesday. But look, I can't tell you how many days I've caught 100-pip moves on Sunday. Like, it happens more often than it doesn't, if we being honest. Like, Sundays are probably my best days statistically, right? But yeah, exactly. That is how I get wick entries, bro. That is exactly how. So if you ever see them, that is what we doing. But it gets so precise. You can do this on the 1-minute chart, right? And this is a big misconception a lot of people have. They say you can't trade the 1-minute chart. You can't trade, lower time frames. But what's important to understand is that all time frames are essentially the same. They make the same patterns. They do the same things because it's the fractal nature of the market. So The only difference is the higher time frame gives you more time to think about whether or not you want to get in or not. When you trading on the 1 minute, you have to be very decisive. You have to be very, quick with your decision making. And that's what a lot of people are uncomfortable with. But the patterns form. I can't tell you how many times I risked 5 pips to catch 30, and I was done for the day in a matter of an hour or two. Like, why not trade that way? Because you can swing trade if you want, but let's be real. Type of me in the chat if you got a problem holding a trade all week. I'm just like, look, I'm a trader. I know. I've taught a lot of people. The biggest issue most people have is holding trades all week long, or 2 weeks, 3 weeks long. It's damn near impossible. Like, me as a trader, bro, I've been trading for 5 years, plus 5+ years at this point, probably closer to 6. It'll probably be like 6, like once we get down into the fall. Obviously, I was in college. I was playing football. So I was doing it, but I wasn't doing it like I'm doing it now. So if you want to say like fully committed all day, every day, more like 4 or 5 years, right? But one thing I'll say is that, bro, the hardest thing is to hold trades. If you got like a take profit that's 200, 300 pips away, that's one of the hardest things to do. So I want to teach y'all a way how you can get in, pay yourself, get like a 1 to 5 risk to reward trade setup in one trade session, right? Like, no cap. Like, I remember, like, we catch 1 to 10s during sessions sometimes. You know what I'm saying? So imagine getting on a computer at 7 o'clock, and then by 8 or 9 o'clock, you've made 1 to 10 on your trade. That's the type of setups that I'm trying to give to people, right? So this is why right here, we're on the 5-minute chart. So what is it that we see here? Obviously, we're in this area of demand, and then we cleared lows as well, okay? Amongst clearing lows, we can come down to, let's say, the 1 minute. We can see a little bit more, or 3 minute. If you know, you know, right? React low, react, sweep the low, and then we push up with an area of imbalance, okay? I wouldn't be surprised if we reacted right here, okay? I wouldn't be surprised if we reacted right there. So amongst reacting right there, one thing that we can do is we can have our 5 pip stop, and then we just target highs, right? It got to at least be a 1 to 5. So here we got almost a 1 to 8, which is beautiful. And if you want to target this high up here, there you go. That's your 1 to 12. So this is the type of trades I like to take, because even if I'm wrong, bro, all I gotta do is be right once. If I can be right once all week, I'll make money. Now I'm not I'm not wrong that often. I will say that, but it just puts it in perspective, because it's all about having peace of mind when you trade. And think about the type of peace of mind you would have if you knew that all I got to do is win a couple times a week, if not shit, 1 time a week, and make money. It's like flipping a coin, but every time you land on tails, you lose $10. Every time you land on heads, you win $100. Type of me in the chat if you would keep flipping that coin, even if you took 3, 4, 5 losses. If you had to flip a coin, every time you landed on tails, you lost $10, but every time you landed on heads, you made $100. That's essentially what it is that I'm doing when I'm trading, right? So I know there's a possibility to lose, but the upside is so much in my favor that I'm cool with the risk at the end of the day. You know what I'm saying? So this is something that I would be looking to take, especially with me believing that the DXY is going weak. Remember what we talked about with the DXY for all my beginners? Anything that ends with USD is going to do the opposite of the DXY. So I have the DXY dropping to, what is it, 101.35? Is that what I said it was? Oh, let me see. Was it 101? I think it was 101. Yeah. So 101.35. Okay. That's where I got the DXY drop into. So again, anything that ends with USD is going to do the opposite of that. All right. So if that's going to drop, then this should continue to buy. And, this could just be where you partial out at, because you could see how much upside potential we actually have if the market decides to go the distance, right? We got 42 on the call. Shout out to y'all, man. Let's keep it pushing. Let's keep it pushing. Let's see if we can get to 50. Let's see if we can get to 50. All right. So you see the upside potential that we have right here of the market. It has the potential to go the distance. And that 101.35, that would be the equivalent of us coming back up towards this area on GU right here, right? So can it go higher? Yes, but this is like the bare minimum of what I'm expecting. So that's a 1 to 50. Now, am I going to hold the whole trade that far? Absolutely not. I would be lying if I said I'm going to hold the whole position 1 to 50, because that's a lot of money that you potentially leaving on the table if it don't go your way, right? But one thing I'll say is, even if, let's hypothetically say that you close 90% of your trade, like right here or even right here, even at 10%, even if you got 10% of your trade open right now, you still up another 5%. Think about that. Right? And that might not sound like a lot to y'all, but I teach people how to get funded accounts. So the problem is, a lot of y'all don't suck at trading. You just don't have enough capital yet. Because, I mean, if you took $100 and turned it to 150 and then turned around and blew it, you made 50% on your account. That's phenomenal. The only difference is your account is too small. So now what I want you guys to focus on doing, obviously there's been a lot of talk about my Forex funds and what prop firm can you trust, right? I'd say still go out and do your best to get funded. Don't let that scare you. Worst case scenario, you can dispute it at the bank if everything goes against you, right? If people start shutting down, just tell your bank, they'll give you your money back. But if I was you, I would be aggressively purchasing funded accounts, because you have the ability to get access to capital you otherwise wouldn't be able to have, right? And just with that being said, that same 5% on this tiny $100 account that you're trying to make a living off of, that's $5. That same 5% on a 100K account is $5,000. You just paid your rent for probably a couple months, depending on where you live. But more than likely, you probably paid rent for like 2 months, right? So that's the power of what it is that we teaching y'all how to do. Okay, that's the power of it right there. So this is what I see happening on GU. Now remember, this whole setup came from the higher time frame as well. Remember what it is that we're looking at over here. We got an area of demand right here. You see the sell to buy candle, right? I know all y'all see this big sell to buy candle. Okay. So what I'm about to teach y'all real quick, a little sauce real quick, is mitigation, sell to buy candles. The reason why the market respects these areas is because understanding how the market creates these price patterns. Realize that, large hedge funds, large players, they can't just get in the market the way that we do. They have to create a way to enter the market because they have so much capital. They have to create a way to make, to find room in order to get into the market. Because every time you buy, there has to be an opposite seller. Every time you sell, there has to be an opposite buyer. So what happens is they will engineer price patterns that create liquidity, so that way they can get in. And this is the reason why, like, bro, I'm down there saying too much. But look, this is the reason why so many people fail at trading, is because the game is rigged against you if you don't know this stuff, right? Like, think about it. How do the big people make money if there has to be orders on the other side of their positions, or unless, if not, they can't take the trade? You know what I'm saying? Like, the reason why you push the button and you get in immediately is because the little $500 that you risking, $1,000 that you risking, is nothing compared to what JP Morgan has to risk every day. So realize they have to get you to trade prematurely in order for them, like when you lose, that's more liquidity available for them to take a trade, because there needs to be an opposite amount of liquidity on the opposite side for them to take a trade. So here's what I mean by that, right? We have a sell, then you have a buy right here, all right? So here's what's actually going on. They take a sell. They take a sell right here. And then they also take a buy right there, right? Right here. Right there. So the thing is, they're in two positions at once. This is what they call hedging, right? Hedge fund managers. Hedge fund managers. They're hedging positions, okay? So just because this buy is going into profit, guess what? This sell is in drawdown. So type a one in the chat if you could relate to this. Have you ever took a trade that went against you and you were just hoping and praying that the market came back for you, right? Like you ever took a trade and you was in drawdown and you was just praying that the market came back so that way you don't have to close at a loss, but you can close at break even, right? A couple people saying they could agree, right? So that's essentially what they're doing, okay? That's essentially what they're doing. They go in a drawdown intentionally, then they come back for that position. So when they come back for that sell, they can close it, and that's what they call mitigation, okay? Mitigation means to lessen the risk. If you look at the Webster dictionary, that means like to lessen the risk or the damage or whatever, right? So when they close that trade, now they can add to this buy that they already had right here, right? So now we can add to this buy that we have right here. We can add more right here, okay? So now they add right there. But it's going to happen after they clear out lows, right? So the people that bought prematurely, that bought right here, they're going to get taken out. People that bought here, they're going to get taken out, so on and so forth, right? So that's what happens. The market is creating these price patterns intentionally, and that's why they're respecting certain areas, right? So I'm anticipating bullishness because I feel like we did come and mitigate already. So whether it happens now, whether it happens later, I'm looking at this sell to buy candle right here. I'm looking at 2386. All right. 2386. That's what I want right there. 5 pip stop loss, 260 pip take profit. All right. 5 pip stop loss. If you're scared, give yourself 10. All right. Me, I'm using a 5 pip stop. All right, because I ain't no punk. So 2386. 2386. It might happen now, it might push up higher, and it might happen later. But essentially, that's what I'm looking at. 2386. All right. Somebody asked for oil. I personally don't trade oil for real, but I will take a look at it. I can't tell you the last time I actually traded it, but you know, any pair, anywhere is my motto in life. So believe it or not, I actually did mark this up over here. I did have this buy market. That was a little while ago. As you can see, that was in, what's this, March? Yeah, that was March. So that was a long time ago. But I did mark this up. I do remember seeing the market consolidate. And that's one thing you guys got to understand. We will consolidate, manipulate, and then continue, right? Consolidation, manipulation, continuation. So I'm heavily bullish on oil. Gas prices will continue to rise. Shout out to Joe Biden. But I'm very bullish on this. I'm bullish till at least we get up to, let's say like 114.25. 114.25 is one thing that I see us getting to for sure. I would say between like 114.25 to 116 will continue bullish. Now, obviously, that's the daily chart. Now we can come down and see if we see anything that we can enter off of. But I'm gonna be real, this thing is flying, bro. It's not even making your typical price patterns. Like, it's so bullish right now. It's not even making the typical patterns that I need in order to get in. So for me, I would personally probably not take a trade on it. But since you did ask me, I will say this. I'll probably be looking to play continuations, okay? On a lower time frame. I see us getting above 193.8. We might find a relief period over here at like 196. We might find like a period of relief that could give us a retracement. Because overall, I'm bullish, but I would like to think we can get a period of relief, at least to, come back and like at least fill in some lower prices before continuing up, right? That's what I would like to see. But obviously that doesn't have to happen. But this is just what I believe can happen, right? We do look over here. We got some imbalance. We obviously cleared some highs here. All right, we did clear some highs where then we continue to push lower. So I would say this is the last untested area of supply that we have not yet come back into. But I would say like on this 4-hour chart, this is the 4 hours. So for now, I would look for continuations until we get up to 190. I would look for continuations till we get up to $96. All right. Once we get up to $96, I would probably look for a bit of relief. And then a continuation later on. On this particular time frame, I say we could probably respect this low. Maybe we come clear out this wick here. We can clear that out. I'd like to take buys. Come down, make a low, higher lows, higher lows. Yeah. If we can come back to 89, 89.7, I would like to take buys from this area here, right? But that is, anticipating that we do get a little bit of relief on the 5-minute. So that's what I would be looking for right there, okay? Somebody sent their Euro USD into the chat. Oh, yeah, I like it. I like that Euro USD. I am bullish on EU. I did take some buys on EU last week. So that looks good to me. That looks good to me. That's a very nice trade setup. I think you definitely have the right intention, the right analysis. I agree 100%. I'm in at the absolute bottom, so I'm not positive on whether or not I'll take that re-entry, that continuation opportunity. But overall, I do like that setup. I would definitely take it if I wasn't already in at the lows. Okay, so that's a very nice trade setup. That's exactly what I look for when I'm trading. All right. So very nice, very nice. So you got your low here. Area hesitation that creates relative equal lows. Even though we did tap into it just barely, there's still so much more demand underneath. I don't trust those tiny wick unders, right? You can't trust the first tap underneath an area of inducement all the time. So even though you get that first tap and the market starts pushing up, just be patient, right? Because more than likely you'll fill in a little bit more and then you'll get the move that you really want. So maybe the market comes here. I'm not telling you have to take this sell because we already on such a smaller time frame. I probably just focus on the buy, but here's what I see potentially happening. We probably come up here. Then we get that right there, all right? So, yeah, I agree with you there. Very nice setup, my friend. I'm down here in the lows. So I may take it just depending on how I'm feeling. I may just pass on it, all right? GBP CAD finally gave us what it is that we was looking for. Obviously, when the market was over here, when the market was just building up right here, and this is why we have the drawing, because we talked about this last week. We just talked about the market coming back to take out these lows as it did, right here at 1.6743. That's the low, the area that I wanted us to come clear out. And considering that we did that, I'm similar to GU. I'm just looking for continuation opportunities on GBP CAD as well. All right. So all this low right here is what I would consider a sweep on a run on liquidity, because we took out the lows right here. So it looks more complex, but if you can just simplify what it is that you're looking at right here, essentially it's just this right here. Right there. That's it. All right. We took the lows. So now we have a strong low that's potentially forming. So now that we have the strong low, we anticipate this push up right here. That's what we're anticipating. All right. So, this low took the previous lows. So now I'm anticipating continuations from here on out, at least to clear out this high. This will probably be where I partial out, depending on what my stop loss is. And then I could just continue holding as long as I want to. All right. So just like GU, I'll be looking at this region right here. Specifically here, I'll probably be looking at 6746. 6746. All right. Put my stop beneath the low. So not exactly 5 pips on this trade, more like 15. But either way, still a nice setup. Okay. Either way. And I feel like we could at least, I know for a fact we'll come clear this high. Get your 1 to 5 and you want to partial out there, you can. But I'm more towards, I want to get at least 200 pips out of this. So, and you see the area that we're leaving from. So I do like this area here. Some people might wonder, okay, whether or not this is an equal low. And it's a good observation that you're making. But overall, this area still does take a bit of liquidity even still. So yeah, it does have some nature of equal lows to it. But considering that we did take lows already, I'm looking at it as, we're respecting this area of demand. We already wicked underneath this low once and continued higher. So I expect the same thing to happen here. All right. So far as GBP CAD is concerned, this is what I would be looking for. This chart. Looking for intense bullishness, right? 200 pips at least. We could possibly even get closer to 350. All right. Possibly get 350 out of it. So I'm feeling good. I'm feeling good on my favorites. I love GU, I love GCAD. Anything on Nas we can get. Oh wow. See, that's why you got to be paying attention, man. You got to pay attention. See, this is a funny setup because I wanted this area to get hit over here, right? But it just got hit later on in the day. So I didn't really get a chance to, take it the way that I wanted to take it. But it just goes to show you, that's my fault for not setting an alarm. I didn't set an alert. at the price point that I wanted. So it kind of just played me, right? But when the market was over here, I was saying, okay, I wanted to push up into this zone and then drop. That's what I want. But obviously the market didn't do the exact pattern that I wanted, but it still respected that zone. And this is why it's important to set alerts, because if I would have had an alert set, even though the market took a different path than I wanted it to, I still would have been alerted and I still would have been able to take that trade. So for me, it's like I wasn't like once all of that happened, I kind of wasn't paying attention to it. Then the market started going bullish. Like I wasn't even looking at the time. But if I had that alert set, that could have been a beautiful setup. So that's my fault. Definitely missed out on that opportunity. But this week, I think we'll probably get some more moves on it. At this point, I feel like we'll just get continuations to continued bearish. If we can retrace a good amount of distance, I would be looking for the continuations. I am looking for some bullishness out of the market just to start the week. We did come down. We cleared these lows here. Overall, I am still bearish, but understanding that we did clear some internal structure, I think that that could be enough to start our retracement period. All right. Retrace, obviously, the higher we retrace, the better. So I'm obviously going to be looking at, areas up here to sell from just because that makes the most sense logically. But if we don't end up getting that high, I'll end up, seeing if we can create a pattern that makes me want to take a sell anywhere else. So there's certain areas where you just sell because of positioning. And then there's other areas where you could sell based off the pattern, right? If we get up here, I'm going to sell just because of where it is and the risk to reward. It's in a high, it's close to that high. It's in the area of supply. You take the trade and you live with the outcome, right? But if the market doesn't get that high, you have to see a little more price action that allows you to, feel comfortable taking that. I do see this area of imbalance right here. So that is something that I'll pay attention to. All right. So once we come in here, fill in this area of imbalance, I'll see if we get a pattern. Like we come here, we sweep a high, then we make a new low right here, and then possibly enter off that retracement after making that new low. All right. So you got my three favorites. We got two setups for sure. We got two in a possible. All right. We got two in a possible. So I'm feeling good about that. Is there anything else y'all want me? Let me make sure I take a look. I know y'all love gold. I hate gold, but you can take a look at it. I should probably stop saying I hate gold because I'm not that bad at it, honestly. I'm pretty decent with it, but it is what it is. I just prefer to trade other things. But I'm looking at continued bullishness on gold. Where it might come from is the only thing I'm a little conflicted by. Gold is a different pair because I feel like it does some unnecessary things from every now and then. I'm gonna say we can continue. I would like for us to clear out this little area of consolidation first. All right, possibly push lower. Obviously, the lower we get, the better. But maybe we probably just get a little reaccumulation a little bit higher at 1918 or maybe 1913, 1912 areas. I'll kind of pay more attention to that as it starts to form. I don't want to give you guys nothing definitive too soon because again, gold is a little out of control sometimes. It's like that super emotional toxic partner that you can't quit messing with them. Like gold is a little crazy, you know what I'm saying? AUDJPY, sure, let's take a look at it. On the 1 minute, what do you mean? What are you looking at? Are you looking at this sell? I'm probably leaning more bullish at the moment. I'm probably a little more bullish at the moment. Quick sell. Well, I see what you see. I'm just not as interested in it. When I do take these lower time frame opportunities, the way the retracement form is important to me. The retracement is pushing up with a little more aggression than I would typically go for. Not to say that it can't happen. It's just the way I pick and choose my battles, right? I do see what it is that you see. Essentially on a lower time frame, this is a high that pushed down into this low. So we come retrace back into the area. It's not crazy to think that you can get a retracement from there. It's just how I choose to pick my battles, right? But nonetheless, it's not a bad setup. It's not a bad setup. The risk to reward is there. You traded on the lower time frame, so I'm assuming your stop loss is probably 5 pips or so. So it's not bad. Not bad. I could see it. I could see it. I would, if I wasn't looking for other pairs, I'd probably take a quick jab at it. Yeah. It's just, yeah. I don't know about that one. I don't know. Even with NZDJPY. So we took a quick sell here, broke lows, and then the market just continued. So maybe that's what happens, right? You take like a quick short, then the market can continue. The other thing is, considering that we did break above this high, a lot of people say, okay, you break above a high, you're going to start reversing, right? But there's a difference, right? Sometimes this will be a strong high, but sometimes the market is just literally just breaking and making new highs. And that's one of the hardest things to determine. Is it a break of structure or is it a sweep on liquidity, right? Because sometimes they look exactly the same. So the way that I tell the difference is based off the reaction afterwards, right? So, for example, we took highs right here, okay? We took highs right here. So a lot of people will say, okay, is this a sweep of liquidity or is this just the market making a new high to continuously make new highs? The reason why I would say it's just a new high is because the price action afterwards. If it's a sweep on liquidity, the drop needs to be strong and aggressive, right? But if the drop is slower than the push up, then it's probably just a break of structure and we're going to continue. So now I'm looking at areas of demand that the market can continue from rather than drop from, right? So that's just one thing I want you to take into consideration. Like if it's a sweep of liquidity like this, the market should like start having an aggressive drop. But if it's a break of structure, it'll probably be like this. And then the retracement, right? The retracement is a lot less aggressive. Like the reaction after you take highs is less aggressive than if it's a sweep of liquidity right here. So just with the reaction, the way that it's dropping, it looks more corrective than it does like liquidity grabbing. So I hope that makes sense. All right. So that's why I'm not too all in on the sales. If anything, it might be like a quick sell just to find some more buys. All right. The faves are GU and GCAD buys, bro. GU and GCAD buys. All right. For the sake of YouTube, I'm gonna post this so you guys want the setups and you can definitely grab them there. But I don't want to be too repetitive just for the sake of the recording this call, right? Well, shout out to you. I think you caught this Euro JPY buy last week. I was looking in the chat. And take a look at Australian dollar, Australian pairs, and then I think we'll call it a day after that. All right. Similar concept though. Similar concept. I'm still a little bullish on it. Just because I am bullish on GU, EU, and I'm bearish on the DXY, so I can't really be too bearish on AUD, USD. All right. I can't be too bearish on it because I am bullish on, all of the pairs that end with USD. But again, you look at how we pushed up compared to how we're dropping, right? Like we pushing up at this sharp angle, but we dropping like this. The momentum is still bullish, right? If this is a true liquidity sweep, then the momentum should have picked up after we took liquidity. The momentum should have picked up on the downside. So the fact that that didn't happen, I have to assume that this market is probably still bullish, and it's just like finding more opportunity to go bullish, right? So I would say, and maybe this is just the spread, the new market day opening. So I'm not going to necessarily call a trade out on it just yet, but I think we're going to come down and find a way to respect up here. I think we could probably respect this low over here and just continue going. Like this is just like a more of a continuation play, you know, like this is like creating, this retracement is creating liquidity on the way down. So I just see it finding a way to push back up, whether it's from here or whether we push a little bit lower and then go up. I'm more bullish on it than I am bearish. All right. So that's what I see there. GJ, real similar to GU and GCAD. I'll be looking for some buy opportunities. You could probably get some, this looks more like a potential sell in my book than the other pairs. So that may validate, some of the other pairs dropping, like AUDJPY. Even though I wasn't too fond of it, that could possibly validate it. But I am looking for continuations on the buys once we get down to like 182.7, right? So once we get to 182.7, I would say you clear to go after buys at that point. All right. I do think that this market, we did come down, we took these lows. So we came down. Now we're back in this area of potentially respecting demand. We see this sell to buy candle. So once we come back to test that sell to buy candle and take out all the internal range liquidity there, I would be in full support of taking some buys once we get to 182.7. All right. 182.7, I'd be in full support of taking buys on the higher time frame. We're also, still bullish, to say the least. Just overall, 4-hour daily market is still very bullish. So I would anticipate this market continues once we get down to that point. Okay. So bullish on GU, GCAD. GJ still has some time to go. So, but I feel like GU and GCAD are pairs that you can get right away, right, tonight. So those will be the pairs that I personally focus on. All right. Those will be the pairs that I personally focus on. All right, guys. So with that being said, we got comments, questions, concerns, guys. Comments, questions, concerns. Comments, questions, concerns. Nice AUD CAD, bro. Nice AUD CAD. I could see the reasoning behind that. I can see the reasoning behind that for you to drop that trade in the that setup in the chart in the chat. I can see the reasoning behind that. Very nice. Very nice. It's all about perspective, man. It's all about perspective. If you can validate it reasonably, there's not really too many bad trades if it makes sense from a technical perspective and a risk to reward perspective. You can validate a lot of trades. You know what I mean? There's a lot of trades that you can justify if you're looking at it the right way. So yeah, I see the potential there for what it is that you had. A little bit of consolidation for me, a little bit too much for me and my liking, but I could see it. I could see it. I'd rather just trade what I got though. I like to trade what stands out to me. If there's any pairs that are a little confusing for me, I'm gonna just wait till I get a little more information on them. The market, the day is still young, the week is still young. It's just Sunday, so it's not imperative that we have to necessarily, um, have everything figured out Sunday right when the market opens. Like let's let these markets give us a little more information, and then we could probably have more outlooks on some of the other currencies. But for today, I'm looking at GU right about here, 2386. I'll take my first jab right there. If I take a loss, unfortunately, I will actually look for something else because I do believe we're going long. Whether it's from here, whether we go a little bit lower, I'm going to be actively and aggressively getting into GU longs. All right. So just with that being said, guys, I feel like, we definitely went over a lot. There's some analysis, there was some teaching, there's some mindset, a lot of stuff that we covered on the call today. I definitely appreciate it. I feel like we got up to like 45 or 48. I think we got close to 50, something like that. So for everybody that's still locked in, shout out to all of you guys. Obviously, some of y'all got stuff to do. You're getting ready for the week. It's Sunday. I know y'all trying to unwind, enjoy family, and prepare for the work week. So for all of you guys that are still working, stay tuned, stay tapped in and continue to be grateful, man. A lot of people dread their jobs, but if your job is allowing you to invest in yourself, continue to be grateful for where it is that you are in your journey. All right. For everybody that wants to continue to learn, right? Because this is the free call that I do across all of my groups. They're one free call a week. But if you would like to be on Monday pre-London, Tuesday New York, technical Tuesdays, which is your educational call. We do Wednesday and Thursday London or New York session. Then we do Thursday night pre-London session. Then it's like we literally do 6 calls a week. So if you guys would like to be a part of that, one thing I will tell you is that you want to make sure that I could actually drop the link real quick. It won't take me too long. I'll drop that link into the Discord chat. Not the Discord, but I'll drop it into the what is it? The Telegram. My bad. So I don't have to drop it here in the Zoom chat because we're about to get off of Zoom here in a moment. I'll drop that link into the free Telegram just so you guys know how to join. Again, if you guys want access to the course, because the Telegram or the Discord chat is essentially live trading calls. But if you guys want like the in-depth education that you can go at your own pace, because I trade live, right? But if you guys want to be able to like study any time of the day, regardless of a schedule or anything like that, I would highly recommend tapping in to Trade Genius Academy.co, not .com, but .co. And if you use the promo code TG300, that will give you $300 off. All right, $300 off. I'm gonna come to my senses soon enough. One day this code ain't gonna be here, so just do what you can. Make sure you grab that. You guys, want to work something out. Just let me know if you guys are having any issues. Maybe we could talk numbers, but essentially it is gonna be right here. So originally $750, but I am willing to give you guys $300 off just because y'all rocked out with me for the entire time. All right. But not sure if you talked about it already. Do you do London and New York? I do both. I do both, bro. I do both. I do New York Tuesday, Wednesday, Thursday. I do pre-London, like not London because I'm not up at 2, 3, 4 in the morning, but I do like right before London, like midnight. I do that Monday evening, Thursday evening, and any other day that I want to do it, but no less than those 2 days. So you have 5 days of live trading, and you also have technical Tuesdays, which is our educational call. All right. So just be sure to tap in, guys. Again, if you guys want to join the community, that is $60 per month. Okay, $60 per month. And again, that's just live calls. All the recorded calls, all of my case studies, all of my terminology, all of my in-depth material will be in Trade Genius Academy. And then the community is strictly for live trading, educational live calls, and trade signals, right? And obviously you have the community element of it as well, which is a huge plus. All right. So other than that, guys, I do appreciate you guys' time. If you guys got some value, make sure you guys be sure to follow me on Instagram. And I will be uploading this to my YouTube. I want to go way harder at that. So please do your boy a favor. Make sure you go on there, like, comment, subscribe. I'll drop the YouTube link into the Telegram and to my private Discord. So make sure you guys go in and rewatch this. Make sure you get all those entry points and stuff like that for the setups that we're looking at today. All right. So with that, I love you guys. Appreciate y'all. See you guys at the top or from the top, because the bottom is way too crowded. We'll never look down on y'all unless it's to help you up. Much love. Peace. It's your boy Wallstreet Ray. See y'all next time.